Right now, we're sitting smack in the middle of the greatest stock market bubble in history. And when it bursts, it could devastate the financial futures of millions of Americans. But there's only one thing that could make it even worse. And that's if you've kept your money out of the boom that we've seen on Wall Street over the past couple of years. Because if you have, it's possible that you've missed out on some of the biggest gains that you'll ever see in your life. You're not alone, though. Some of the smartest, most successful people in the world, including some financial professionals, are likely feeling the same way. For instance, last May, famed economist and author Harry Dent was calling for the market to crash with lightning speed potentially starting within the next 6 weeks. It didn't crash. In June, Rich Dad Poor Dad author Robert Kiyosaki warned that the biggest crash in history was coming soon and that a new depression was set to follow. That didn't happen. In August, Jim Paulson, chief investment strategist at the Leuthold Group, wrote in a research note that a 10 to 20% sell-off is almost certain to occur before long, and it would not be surprising if investors encounter one before this year is over. They didn't. That's not to say there haven't been bumps along the road. We've obviously seen some recently. The stock market never goes up in a straight line, but the reality is, as we sit here in 2022, we're still in a bull market. And my research indicates that it's not ending yet. However, this may be your last chance to profit from it, because I believe that many of us, including myself, will never see another buying opportunity like this again, potentially in our lifetimes. That's why I want you to please pay close attention to what I'm about to say. Right now, we're in the midst of an extraordinary final act for this massive bull run that began when stocks rebounded from the COVID crash in March of 2020. Think of it like a 4th of July fireworks show. As the show goes on, do the explosions get smaller and softer? Of course not. They keep getting bigger and louder, all the way up to the final moments when you get the biggest, loudest booms of all to close things out. That's where I believe we are right now with this bull market. The grand finale, with huge gain after huge gain popping off across the market constantly. We've already seen the crescendo beginning with huge returns in 2021, many of which you're seeing on your screen right now. And I wholeheartedly believe the gains you could make in 2022 could be even better. But if looking at those fantastic profits is giving you FOMO, or fear of missing out, I don't blame you. A lot of people have made a lot of money in the stock market in the last 2 years, and if you weren't one of them, it's easy to want to kick yourself. Thankfully, my research shows that there's still time for you to do just as well, if not better, in 2022. But to make it happen, and to overcome that fear of missing out that you're feeling, many folks, perhaps even you, have to get past something else first. It's not fear of missing out. Instead, it's the fear of losing everything. This is what kept so many investors on the sidelines since COVID hit. It's the worry that the minute that they put their money back into the market, everything will crash and they'll lose it all. So they hold on to their cash, leaving it sitting in some useless bank account that's paying them around 0.5% interest a year. But instead of keeping their money safe, their fear of losing everything has actually prevented them from building their wealth at a rate that we may not see again for decades. Look, the bottom line is this bull market can't and won't last forever. No bull market in history ever has. But you still have the opportunity to collect some game-changing profits before it's over. This is a rare moment in time, and while many are expecting a major market fall in the near future, I believe the opposite situation is setting up. I know that may seem hard to believe. After all, everywhere you look, there seems to be bad news. Russia's invasion of Ukraine has caused a geopolitical nightmare that's sent shockwaves through the global markets. New COVID variants emerge that threaten to shut down our economy. The government is borrowing and printing trillions of dollars with reckless abandon. Inflation has soared to levels that we haven't seen in decades. And it feels like everything, from supply chain issues to the number of Americans living in poverty to the out-of-control national debt, is screaming, danger, crisis ahead. But think about it. Despite all of that bad news and all of that bearish sentiment, the stock market has still gone up. It won't last forever, but just like the fireworks spectacular, Bull markets rarely just fade away quietly. Instead, they go out in a full-on blaze of glory. And as you'll see today, these grand finales have happened before. Not just once, but dozens of times and in many countries around the world. Today, I'm going to share with you why I'm so confident that this is happening right here in America right now. I'll also show you how it could potentially double the size of your retirement account in the next 12 months if you act now. Sure, you could try to do it on your own. I'm sure if you buy a simple index fund, you'll probably do okay. But if you want the chance to capture the biggest gains, the kind that could turn every $100 invested into $300, $500 or more, you are going to have to be bold and do something completely different. Today, I'll not only show you what that is, I'll also show you how you can receive trade recommendations, each with the potential to return as much as 250% in profits during the bull market's grand finale. My exact prediction for when the stock market will peak and when I believe you should pull your money out of the stock market. My detailed analysis of where I think you could find the best post-crash profit opportunities, many of which are not in stocks. This may be the most important piece of research I've made public in my career. And I truly believe it's crucial to the future wealth of you and your family that you secure a copy of it as soon as possible. I'll tell you how in just a little bit. In addition, before the close of this video, I'm also going to give you the name and ticker symbol of a stock I'm very bullish on right now, 100% free of charge. No catch, no gimmicks. Just stick around until the end of my presentation and you'll receive all the info needed to add this company to your portfolio at no cost to you whatsoever. But first, let me introduce myself. My name is Dr. Steve Sjuggerud. I've done just about everything there is to do on Wall Street. I've been a stockbroker as well as the vice president of a mutual fund. I've been quoted by the Wall Street Journal, Barron's, and the Washington Post, and I've appeared on Bloomberg TV and Fox Business News. I've helped ring the opening bell at the New York Stock Exchange 3 times and once at the NASDAQ too. But over 20 years ago, I quit my last real job running a hedge fund. At the time I left the institutional game, some of my closest friends couldn't believe I gave it all up. But I quit and walked away from it all to do what I love on my own terms. And it was the best decision of my life. You see, I wanted to offer people something that's nearly impossible to find on Wall Street. Investment analysis that's free of hidden agendas and conflicts of interest, and that's focused solely on the success of the people receiving it. So I launched a private financial research group called True Wealth. At the time, I had no idea how successful it would become. But today, that little project has grown into a movement that connects nearly 100,000 people around the world. And it allows me to bring opportunities like this one straight to everyday, hardworking people like you on a regular basis. I firmly believe that if you make the right decisions today, you could dramatically transform your financial future before the inevitable market crash that's approaching. Look, most folks have this market dead wrong. They look everywhere and see warning signs. But if you compare today's setups with similar ones throughout history, you'll realize that you don't want to be cautious now. You want to be bullish. You simply have to take the first step. But you need to do it immediately because time is quickly running out. You also have to know what to buy and what to avoid. And that's the purpose of my message here today. Because if I'm right, and your fear of losing everything causes you to miss out on this bull market's grand finale, you could end up regretting it for the rest of your life. I know because I've seen it happen before. Take a look at this chart. It's the stock index of one of the wealthiest nations in the world. As you can see, it entered a furious bull market in the mid-1980s, and investors who rode it higher had a chance to make a killing. But then the bubble burst, and to make matters worse, in 32 years, it's never fully recovered. In other words, it was the last bull market that many people in this country have seen. It's incredible. 32 years later, and these stocks have still never even come close to what they were worth at their peak in 1989. Now, if you're a student of history, you may have guessed that the country I'm talking about is Japan. Look at the chart again. Do you see how their Nikkei index, which contains the country's top 225 stocks, surged from around 5,000 to 40,000? But pay special attention to this point right here. Notice how a huge part of these gains came in the last year or two of the boom. This final furious stage of a bull market has a name. It's called a melt-up, and it's precisely what's happening in America right now. You may have noticed this term being thrown around by the mainstream financial media over the last few years, on Yahoo Finance or in Bloomberg or USA Today. Now, I won't claim that I invented the whole concept of a melt-up, but I've absolutely been on record as saying it's what we've been experiencing on Wall Street for years now, long before many other experts caught on. You can see it for yourself right here. I first talked about the melt-up all the way back in October of 2015 in front of a small audience at a conference in Las Vegas. My simple thesis went something like this. Interest rates will remain lower than you can imagine for longer than you can imagine. And that will cause asset prices like stocks and real estate to soar higher than you can imagine. At the time, a lot of people doubted that the market could soar any higher than it already had. Do you remember where the market was back then? I do. On October 5th, 2015, the Dow opened at around 16,500. And today, of course, it's up to 36,000, more than double where it was 6.5 years ago. Which is why you've started seeing the idea of a melt-up splashed across the front pages of the mainstream financial media more and more each day. Like in Market Watch, Forbes, and the Wall Street Journal, they've all caught on to what I've been saying for years now. Bull markets don't end with a whimper, they end with a bang, a big one. This has been the central focus of my work for almost a decade now. And I'm not telling you that to brag, but so you'll hopefully see there isn't another analyst out there today who understands this situation the way I do. I've spent countless hours studying melt-ups throughout history in order to help people take full advantage of this massive opportunity. And that's exactly what I want to do for you today, with the opportunity to access my 2022 melt-up blueprint, which contains trade recommendations that I believe could return as much as 250% each over the coming year. This could be the only piece of research you need by your side over the next 1 to 2 years if you want to potentially double or even triple your retirement account during the Melt-Up's grand finale. And it's incredibly important that you secure your copy right away. Also, don't forget, before the end of this broadcast, I'll be giving you the name and ticker symbol of a stock I believe has triple-digit profit potential during these final stages of the Melt-Up, 100% free of charge. It's my way of saying thanks for joining me today and making sure that no matter what, you leave here with an opportunity to succeed in the months ahead. But first, I want to show you how shockingly often these melt-ups have occurred throughout history. For instance, this isn't America's first melt-up. That one happened around a century ago during a time when our economy was booming so big they called the decade the Roaring Twenties. Take a look. Between 1922 and 1929, the Dow Jones Index soared from 100 to almost 400. But most of those gains came in the final year or so before the horrific 1929 crash. That's the melt-up. It's right there, plain as day. For investors, it was a once-in-a-lifetime opportunity to get rich in just a few short years. And those that took advantage of it, well, they were in an infinitely better position to survive what came next. Because after that bubble burst and the melt-up ended, it brought on the Great Depression, and it took 26 years for America to recover. Most older buy and hold investors never got back to even, but those who recognized the melt-up went all in on buying stocks and then wisely pulled their profits out before the market completely crashed would have fared much better for themselves, especially when they were able to go back in and pick up shares of those same stocks for pennies on the dollar. That's how financial titans like Joseph Kennedy Sr., J. Paul Getty, Howard Hughes, William Boeing, and Walter Chrysler all amassed huge pieces of their fortunes. And it's how you could potentially double, perhaps even triple, your retirement account in 2022 before this melt-up ends. It's truly amazing how you can trace this pattern back to just about every major financial bubble throughout history. For instance, during the 17th century Dutch tulip craze, the price of a single tulip bulb soared 30 times higher in less than 2 years. And soon after that, the whole tulip market collapsed to zero. But that 2-year span is where an investor could have turned every $10,000 invested into $300,000. Now that's a melt-up. It happened again in the 18th century in France during the infamous Mississippi bubble. For a span of about 1 year from 1719 to 1720, French investors poured their money into a single firm, the Mississippi Company, which enjoyed a trade monopoly with France's North American colonies. This triggered a huge bubble where so many people got so rich at the time that the word millionaire came into existence. However, by mid-1720, the bubble burst and the Mississippi Company's shares plummeted, crashing France's stock market. But the lead up to the crash, where a $1,000 investment could have grown to $20,000 in just around 1 year, that was a melt-up. You can plainly see how so many of these manias and bubbles end the same way, with a furious melt-up and then a huge crash. Like during the NASDAQ bubble of the late 1990s, when the index soared to over 5,000 before collapsing nearly 4,000 points over the next 2 years. Or even more recently, when Bitcoin began its steady climb from around 3,200 at the end of 2018 to eventually 63,000 by April of 2021, right before it lost over 50% of its value over the next 2.5 months. Leading up to every single one of these crashes, you can see a melt-up occurring, almost like clockwork. Which brings us to what's happening right now. It seems like an eternity ago now, but back on March 11th, 2020, the Dow closed at around 23,500, down over 20% from the high it had hit a month earlier on February 12th. The first wave of COVID-19 had officially hit Wall Street, and it was enough to end the historic 11-year bull market that dated all the way back to March of 2009. It was the fastest recorded crash in history, and it sent America into a bear market for the first time in over a decade. But here's the thing. That bear market only lasted 33 days. 33 days. Just a little over a month. The shortest bear market in history. And then it was over. Think about that. The greatest public health crisis of our generation, one that essentially shut down companies ranging from 10 to 10,000 employees, that threatened to destroy entire industries from airlines to restaurants to movie theaters, and that kept most Americans locked inside their homes for months on end. All of that could only keep the stock market down for 33 days. Before long, a new bull market emerged and surged back even higher than it had before COVID. So what happened? How did Wall Street just shrug off the pandemic's impact in a little over a month? Because COVID-19 was a true black swan event, plain and simple. I've experienced a lot of major bear markets firsthand, and I've seen even more big stock crashes. But unlike the dot-com meltdown or the 2008 recession, there weren't any fundamental cracks in our economy that led to the 2020 crash. It was all because of the virus. A terrible, deadly, and life-changing virus to be sure, but not because our economy was weak. In fact, if COVID had never happened, it's possible we'd be sitting here kicking off year 13 of the previous bull market. Because ever since we emerged from that 33-day bear market, stocks have just kept going up. It's been that way for almost 2 years now. Yes, there's been some dips, like when the Omicron variant emerged right before Christmas and stocks dipped big. You could feel investors getting nervous. Their fear of losing everything was kicking into high gear. No one wanted to risk putting their money in if a new wave of COVID was always just around the corner. But then what happened? Omicron fears subsided after it was determined to be a much less harmful variant, posing little threat to shutting down the economy again. And the market rallied back up to new record highs. We've seen some volatility since, and I'm sure we'll see more as the melt-up continues higher. But there's no good reason to think that the end is already here. I know a lot of folks think that it still can't run much higher, but as I told you earlier, history has proven that this is not how bull markets end. They don't die of old age, they die because the fundamentals change. And in our case, that hasn't happened yet. My friend, there's plenty of upside potential left before the clock hits zero. And if you don't want to be completely shut out of incredible profits that this stock market boom has been handing out since 2020, it's crucial that you get your hands on my 2022 Melt-Up Blueprint immediately. Inside, you'll find trade recommendations that you can add to your portfolio as early as tomorrow, and that could each return 250% or more before the market peaks. I'll also give you my precise call on when I believe we'll see that peak and when you should pull your money out to avoid the crushing losses that a crash will surely bring. But for now, rest assured, my research indicates that this bull market is not over yet. Now, here's something that may surprise you. I actually suspected the meltdown might occur in 2021. In fact, I published that very prediction in my True Wealth newsletter on February 19th, right in the thick of the GameStop mania, where we saw the dawn of meme stocks. This is when kids on the internet, total rookies, poured into the stock market to save companies like GameStop, AMC Theaters, and others. And they ended up causing a multi-billion-dollar nightmare for hedge funds. Right around that time, shares of GameStop soared close to 2,500% in a now legendary short squeeze. 28% of all Americans bought shares of these meme stocks in January of 2021, according to a Yahoo Finance Harris poll. That's absolutely insane. But consider what's happened to GameStop since all of those novice investors went crazy buying it at the beginning of 2021. It's still near its all-time high. As I showed you earlier, it was one of the top gaining stocks of 2021 with a 725% return. But the excitement around the stock is nowhere near the level we saw just a year ago. Just take a look at this Google Trends data. It shows the amount of Google searches for GameStop's ticker symbol GME. Hardly anyone really cared about it until this massive spike in searches back in January of 2021. But then, by around mid-March, searches for GME basically dropped down to their normal levels. And they kept going down straight through to today. The same goes for other meme stocks like AMC Entertainment. It barely registered a blip on the radar until it shot higher twice in 2021, once in January and then again in June. But while shares are still trading near those highs since June, Google searches for AMC stock are back down to their usual minuscule level. The buzz wore off in a big way, and the casual market observer just doesn't care anymore. Investors sobered up, and the feverish optimism that we saw at the start of 2021 died down fast. And now that get-rich-quick attitude that many first-time investors brought to the market isn't in the driver's seat anymore. Now, this may not sound like a big deal on its own, but it's pretty crazy when you consider just how great a year that 2021 was for the stock market. The S&P 500 index, which I should point out doesn't include either GameStop or AMC, was up 29% in 2021. That rally came on the back of huge earnings growth from giants like Apple, Microsoft, and Amazon, not the trendy meme stocks that soared on and off throughout the year. The economy is still booming, and the biggest and best companies are profiting from it. Meanwhile, the S&P's biggest fall in 2021 was only 5.2%. That means this has been a year of huge gains and almost zero volatility. It's been one of the easiest markets in history to make stress-free money. Investors should be giddy in this environment. You'd think they'd be on a buying spree after seeing how easy investing can be. But they're not. The casual investor frenzy peaked at the start of 2021 with GameStop and AMC. Once the party died down and everyone took a moment to breathe, that's when negative sentiment started to creep in. And some of the smartest, most successful investors out there, I'm talking the professionals, have gotten downright bearish, even though there's been hundreds of other stocks rocketing higher since then. Over 3/4 of chief investment officers, equity strategists, portfolio managers, and financial news contributors responding to a recent CNBC survey said, now is the time to be very conservative in the stock market, despite the record highs that we're seeing on a regular basis. Normally, you'd expect to see these guys swinging for the fences in a market like this. And if they were, I'd be worried that the crash was near. But these professionals aren't wildly bullish today. They're pulling their money out of the market and they're going to cash. That's a prime example of fear of losing everything right there. And with inflation at nearly a 40-year high, the only reason to hold cash right now is because you think you'll be able to buy stocks at a lower price in the future. So then why does that mean that the meltdown isn't right around the corner? Because this is not what you'd expect to see at the peak of a melt-up, right before a devastating bear market takes hold. And look, I'm a contrarian, so to me that's incredibly telling. It means that this bull market isn't being driven by wild speculation. There isn't some irrational catalyst like what we saw a year ago with a bunch of kids pouring money into GameStop and AMC. That mania has worn off. Right now, stocks are soaring the old-fashioned way on strong fundamentals. That could mean they're making products that people are dying to own, like Tesla providing services that seemingly everyone uses, like Zoom, or hiring tons of new employees like Amazon. And that tells me this melt-up still has legs, and pretty strong ones at that. Look, I know that a lot of you watching today may be feeling trapped by doubt and uncertainty. The important thing is not to panic because you're feeling like you've missed out on this bull run. Instead, now is the time to make smart investments. Investments that aren't overvalued, because a lot of them are these days, that will position you to make money now and keep that money when a downturn comes, and could pick right back up delivering gains when the next bull market begins. The trade recommendations you'll find inside my 2022 Melt-Up Blueprint meet all of those criteria to a T. These investments alone could drastically increase the size of your retirement account. In fact, I'm projecting a potential gain of 250% for each of them over the next 12 months. And if the melt-up keeps on going into 2023, those returns could potentially be even higher. The free trade recommendation I'll be giving you in just a moment has a similar upside potential as well. In fact, during a previous melt-up here in the US from 1998 to 2000, it actually soared 502% in just 2 years. This is what I mean when I tell you that these grand finales of big bull markets shouldn't be a cause for fear, but instead a cause for excitement, because they can actually be among the most lucrative periods in the stock market. Now, it's not the time to be sitting on the sidelines hiding cash under your bed. That isn't doing you any good whatsoever. It's not growing your wealth. It's not building your retirement. It's not doing you a thing. You just have to know the right investments to add to your portfolio. And the due diligence that my team and I have performed on these trade recommendations has me incredibly optimistic about their profit potential over the next year. It's just important to remember that all investments do carry risk, and past performance does not indicate future success, and you should never invest any more money into a stock than you're prepared to completely lose. Before I reveal the name and ticker to you, though, I want to show you one more reason why I'm so bullish on the melt-up continuing here in 2022. And I think it may help calm some of those nerves that you're feeling about the markets right now, because it'll help answer the question that so many people have asked me over the last couple years. When will this bull market end? Well, as I've said a few times here today, I don't expect it to be any time in the very near future. However, I do believe the force that could move us from a melt-up to a meltdown has already arrived. I'm talking about interest rates. Low interest rates have fueled the melt-up. While other investments like bonds, CDs, and money market accounts are paying next to nothing in interest, folks have poured money into stocks instead. But the Federal Reserve has recently begun signaling that interest rate hikes are coming sooner than expected. In fact, by the time you're watching this, it may have already happened. The U.S. 10-year Treasury rate, which is controlled by the free market, not by the Fed, has already been moving higher since early August. And the 1-year Treasury rate is up since bottoming out in May. And because of rising consumer inflation, a majority of Fed members are signaling that we'll see multiple rate hikes in the next 12 months. Sure, we can't see the Fed's exact playbook, but expectations are that this rate hike cycle will last 2 to 3 years, similar to the last one. That means we could see 3 rate hikes in 2022, 3 in 2023, and potentially 1 or 2 in 2024. And while that means our time to profit from the melt-up is starting to shrink, it does not mean that our opportunity is over. My research still strongly indicates that we've got plenty of upside potential in 2022, and perhaps even into 2023 as well. So why am I so confident? Well, because once again, history is on our side. The start of previous rate hike frenzies has actually led to fantastic gains, not horrific crashes. For instance, back in June of 1999, the Fed began hiking interest rates. It went on to raise them 5 more times before the market finally topped out in August of 2000, over a full year after interest rates began climbing. Stocks still continued to soar from the initial rate hike in June of 1999 to their eventual peak. The same thing happened leading up to the 2008 financial crisis. As the country was recovering from the 2001 recession, the Fed was worried that the economy was heating up too fast, so they raised rates in June of 2004. But that was nowhere near the top of the market. In fact, stocks rallied for years after that. Believe it or not, there were actually 17 rate hikes from June of 2004 through mid-2006. And during that time, the S&P 500 still flew up 46% before stocks finally peaked in October of 2007. And the last time the Fed raised rates, the same thing happened again. During the rate hiking cycle from 2016 to 2020, they hiked up rates multiple times, and yet the stock market rallied 80%. So while it's almost certain that we'll see rates rise several times in 2022, and even though a lot of analysts and investors will take this as a sign to cash out and run for the hills, I hope you see that this certainly doesn't mean that the whole market will come crashing down immediately. That's because, as history has shown, stocks can and likely will keep soaring after the Fed's initial rate hike. Given where we are today, this bull market still has plenty of room to run. And that means that being cautious and staying on the sidelines could be a terrible mistake. That said, I do have a precise prediction of where I believe the market could hit its peak and end this melt-up. Based on the history that I just laid out for you, when the market hits this number, I would recommend you 100% sell and get out quickly. That prediction and my detailed analysis behind it can be found inside my 2022 Melt-Up Blueprint, which I'll tell you how to get in just a moment. Beyond even the trade recommendations that you'll find inside, this prediction of where the market will peak could be the most important thing that you take from the blueprint. That's because ever since I left Wall Street, I've managed to put together a pretty stellar track record of telling my readers to get out of the market before a crash hits. For example, back in 2000, when I warned my readers to sell almost every position in their portfolios, I wrote, "We are at the peak of most likely the greatest financial mania that we will ever see in our lifetimes." Sure enough, the dot-com bubble burst and the NASDAQ went on to fall more than 75%. And back in June of 2008, when the financial crisis was on the verge of crushing investors' portfolios, I wrote and recommended that they sell again. We must not listen to hope. We must fear that our losses could develop into a much bigger loss. If you have not done so, close out your position. It's the right thing to do to protect your wealth. There's no telling how much money these warnings have saved my readers over the years, or how much they could have saved you if you'd known about them. We can't change the past, but we can prepare for the future. And that's why it's so crucial that I get a copy of my 2022 Melt-Up Blueprint in your hands right now. Because finding out when I believe this bull market will peak could save you untold amounts of money and heartache, the likes of which we haven't seen since that 2008 crash. This is a rare moment that we must take advantage of. It's what we always hope to see in the markets, but it hardly ever comes along, which is why I sincerely urge you to take advantage of the opportunities in front of you right now. We are in the final stages of a massive bull market, but the biggest gains could still lie ahead. Everything is in place, but you need to act now if you want to benefit from it. Now, I understand that despite everything I've shown you today, your fear of losing everything may never go completely away. And that's okay. It's smart to stay vigilant, and you should never forget that all investing involves risk. You should never invest more than you're prepared to lose completely. But in this moment here today, your fear of missing out should be truly raging, because if you're over the age of 50, this could be the last bull market of this magnitude that you'll ever see. I believe it'll likely be followed by a massive crash that will throw stocks, currencies, and perhaps the entire financial system into chaos. I'm not saying that stocks won't rebound and there won't ever be an opportunity to make money in the markets again, but we could face decades of slow growth or no growth at all. That's why your actions today are so important. This is your last chance to build a retirement war chest that could last you the rest of your life and sustain you through even the toughest of bear markets. To do that, you'll want to own investments that could exceed the overall stock market's return by a wide margin. Most people won't recognize these investments until it's too late, for the simple reason that many of them aren't listed on the S&P 500. Don't worry, they're easy to buy through a standard brokerage account. And as a tidal wave of cash crashes out of the bond market, out of savings accounts, and out of money market funds and back into stocks, I'll show you exactly what to do and how to capitalize on the Melt-Up's explosive grand finale inside my 2022 Melt-Up Blueprint. In it, you'll learn about trade recommendations that you can add to your portfolio as early as tomorrow, and that could each return 250% or more before the market peaks. These actionable trade recommendations are tied to market sectors my research shows, and history has proven, perform far better than almost anything else you could put your money into during a melt-up. The melt-up killer, that's about to make its way into the market any day now. This could be what eventually ends the melt-up and leads to the huge crash that follows. We've seen it multiple times before, but history proves that it will not stop the melt-up anytime soon. In fact, some of the biggest gains over the past few melt-ups here in America have been made after this killer has already arrived. I'll show you the proof that while our window for triple-digit returns may be shrinking, there's still plenty of upside potential left in 2022, and perhaps even into 2023. Where I think the market will eventually peak, and I think you'll be shocked. I truly believe we could still see some mind-blowing numbers in the major stock market indexes before this melt-up ends. I'll lay out exactly how high I believe both of these could go and why, as well as how long they'll take to get there and why you should be all in on the markets in 2022. With the 2022 Melt-Up Blueprint by your side, I'm confident you'll be able to take advantage of this bull market's grand finale. That's why I'd like to send you a copy of my 2022 Melt-Up Blueprint free of charge when you sign up for a 1-year subscription to my monthly research letter, True Wealth. After leaving my career on Wall Street over 20 years ago, I became one of the first analysts hired at Stansberry Research, a tiny publishing firm just starting out in Baltimore, Maryland. It was there that I started what would become my life's work, writing True Wealth. And our success has gone hand in hand over that time. Today, Stansberry is one of the largest and most respected financial publishers in the world, and True Wealth has over 96,000 paid readers on its roster. If you haven't heard of True Wealth before, please feel free to check out our details and disclosures page to learn more about our history and track record. Now, this may sound overly sentimental, but it's 100% true. For 20 plus years now, my passion has been giving everyday people the tools to achieve their financial goals, to help them live out their retirement dreams, and to leave a secure and lasting legacy of wealth for their families. And my team and I do it by finding our readers unique, simple, and low-risk ways to profit, even if it's not with stocks. Now, don't get me wrong, when stocks are the right place to be, like I believe they are right now, we absolutely research and write about stocks. But when stocks are a minefield, like after a melt-up ends, we won't just keep recommending them to you each month. In fact, when I started True Wealth back in 2001, I felt that stocks were a bad deal. After all, we'd just seen a melt-up end a couple years earlier. So I started looking at alternative investments, everything from real estate to bonds to what I called virtual banks to commodities like gold and timber. As a result, my readers had the opportunity to collect gains like 97% on the Van Eck Junior Gold Miners Fund, 165% on Texas Pacific Land Trust, 192% on the Blackstone Group, and the list goes on. And things have continued that way for the last 2 decades. In fact, all told, my team and I have closed out 153 winning trade recommendations since we began in 2001. That's an average of 77 winners per decade. I won't pretend like it's not a big job. I like to do my research in person, which means I've flown hundreds of thousands of miles over the past few years to places like China, Hong Kong, Thailand, Singapore, Switzerland, Fiji, France, Belize, all over the world, all in the pursuits of low-risk ways to help my readers make great profits. And I've had the good fortune to meet or consult with some of the brightest minds in the investing world. People like legendary investor Bill Gross, Asian real estate titan Peter Churchhouse, and Eduardo Elstein, the largest landowner in Argentina. Most of my year has been devoted to finding unique opportunities with triple-digit profit potential for my True Wealth readers. But this isn't just a job, it's my passion. How could it not be, especially when I receive messages like this one from Dale S. Keeping us all up to date regarding the melt-up has helped me stay in the market, but has also helped me to prepare for the eventual meltdown to protect my gains. My wife and I are planning to use the profits to enjoy our retirement and to build a new vacation home on our lake in northern Michigan. And this one from Michael F., which I loved. I have followed True Wealth for many years. I have had incredible gains in my portfolio to the point that I have been able to retire from my high-tech jobs at the age of 59. I owe a good part of this to your research. I currently have a little more than $1.2 million in combined portfolios, and I attribute a lot of the success on the confidence in believing in the melt-up. These folks are why I'm still here writing True Wealth 20 years later. And today, I'd like to offer you the opportunity to join them and take a major step forward to achieving your financial goals, starting with what might be a once-in-a-lifetime chance to double or maybe even triple the size of your retirement account during the grand finale of this melt-up. Many of my readers are already on their way to doing just that, like Don S., who wrote to say, "I have benefited greatly from your melt-up recommendations. I've had 2 3x and 2 2x positions that I've closed out, and 1 3x plus position still going. The gains from these investments have paid for 2 new cars, several home improvements, and just recently funded the startup of my wife's retirement business." Or Robert J., who's also seeing great results. Steve Sjuggerud is the star of Stansberry. With the help of his advice, my portfolio was up 80% last year. And a reader by the name of Jerry R. has also done incredibly well. You have been very helpful, and I am up over $100,000. Many thanks. But becoming a subscriber to True Wealth today won't just help you maximize your profit potential during this current melt-up. It'll prepare for what comes after the melt-up. I believe those could be tough times, but no matter how they end up, I'm 100% confident that my team and I can help you find ways to not only protect what you already have, but also to grow that money, even in a down market. Just listen to what one of our True Wealth readers, Peter F., had to say. "My melt-up story is pretty amazing thanks to you. I have secured dozens of returns from 50 to 300%. Dozens. I have been betting on the melt-up and continued buying great tech companies during each correction. Thanks for everything." Now, I can't say whether you'll make $300,000 following my work or if True Wealth is even suitable for you, but I've come up with a way for you to find out, totally risk-free. A 1-year subscription to True Wealth normally costs $199 per year, and that's what many others have paid for it over the last 20 years. But because we're at such a crucial point in the melt-up right now, I want to make it easier than ever for anyone to become a True Wealth reader, which is why I want my research to be as accessible as it possibly can be. So through this special offer, only available to folks who've joined me for this broadcast today, you can try my research for less than half the normal rate. You'll pay as little as $49 for an entire year. That's a full 75% discount off the regular price. Why so cheap? Because our business only works if our subscribers have success with our research. After all, if our analysis and trade recommendations don't help to make you money, why would you stick around? True Wealth's one and only measure of success is you, plain and simple. And so we strive to keep our readers with us for the long haul. But we also realize that you've got to try our work first to see if it's right for you. And that's why I'm going to give you a full 30 days to read over my 2022 Melt-Up Blueprint, plus our complete library of hundreds of back issues and special reports. If after those 30 days you don't feel like my research is suitable for you, simply let our Baltimore-based member services team know that you'd like to cancel True Wealth, and they'll refund your entire subscription fee with no hassle. That's the absolute easiest way that I can think of for you to give my Melt-Up research and trade recommendations a chance. It's cheap, it's 100% risk-free, and you can even keep the 2022 Melt-Up Blueprint as my way of saying thanks for giving us a shot. And because I truly believe, I'll even throw in one more free special report too. It's called 2 Triple-Digit Opportunities from the Oil and Commodity Booms. Look, there's no other way to say it. 2020 was a brutal year for oil and commodity investors. By April of that year, a barrel of crude oil was actually selling for less than $20. And the Bloomberg Commodity Index had plunged 75% from its 2008 peak. But a lot can change in a couple years. The price of oil has rocketed up 350% since April of 2020. And that same commodities index is up over 70% from its June 2020 low. It's pretty clear that both are in major bull markets right now, just like stocks, which is why it makes sense to also look at oil and commodities as a major profit opportunity during the Melt-Up's grand finale. Inside this report, you'll receive 2 more trade recommendations, one that capitalizes on the red-hot oil market and one that gives you exposure to the current commodities boom that no one's paying attention to. My team is projecting potential triple-digit returns for both of these trades, which means just through these 2 special reports alone, you'll be getting prime opportunities to potentially double your money over the next 12 to 18 months. You'll get all of this, plus our active model portfolio containing at least a dozen open recommendations, all of which are currently in my buy range, just for accepting a risk-free 30-day trial subscription to True Wealth here today. But before I tell you how to do that, as promised, here is your free trade recommendation. I've already talked a bit today about the melt-up that occurred at the end of the 1990s, specifically from 1998 to 2000. Now, most folks know that that period in the market was known as the tech bubble. But here's the thing. Traditional tech stocks were not the biggest gainers during that time, actually. The biggest winner was the biotech sector. This is the corner of the market where you'll find the companies working on the next big medical breakthroughs. Everything from COVID-19 vaccines to gene therapy to robotic surgical devices. Now, obviously, these projects have to go through a lot of testing and approval processes before they become a reality. So they carry a lot of uncertainty and can go through some major booms and busts as a result. But when a biotech stock booms, it really booms. And that's exactly what happened during the late 1990s melt-up. The NASDAQ Biotechnology Index, made up of hundreds of biotech stocks, soared an astounding 494%, far outpacing the overall market. And I'm not talking about one lucky microcap winner skewing the numbers either. This was a 494% gain on an index of more than 200 biotech companies at the time. Just look at some of the incredible returns you could have seen. Novavax up 881%, Amgen up 401%, Vertex up 1,094%, United Therapeutics up almost 500%, and Biogen up an astounding 1,500% plus. And more importantly, they really started to outperform during the final stages of the melt-up. Regular tech stocks jumped an impressive 37% in the final 4 months of the melt-up. An incredible return. But biotechs soared a ridiculous 135% over that same period. And I believe that we could see similar performances this time around. With that in mind, the trading idea that I have for you today is to consider adding shares of Gilead Sciences to your portfolio today. Over the last year, Gilead has outperformed the NASDAQ Biotech Index by 25 percentage points. It's a rock-solid industry leader that's been around for 35 years, and its stock has shown continuous growth ever since going public in 1992. And as I mentioned earlier, its share price soared 502% during that 1998 to 2000 melt-up. I can't guarantee that the same thing will happen this time around, of course, but I think that Gilead's potential for triple-digit gains is clear. But this certainly isn't the only opportunity to profit from the melt-up's grand finale. I'm bullish on multiple investments that I believe could really soar as it continues into 2022. I've placed them inside my new special report, the 2022 Melt-Up Blueprint, which you can receive a free copy of when you agree to a risk-free 30-day trial to my flagship monthly newsletter, True Wealth. And don't forget, you'll also get 2 more chances to profit inside your second free report, 2 triple-digit opportunities from the oil and commodity booms. But here's the thing, I really can't stress enough just how important it is to me that you take advantage of the Melt-Up's grand finale. So to make this opportunity as much of a no-brainer for you as possible, I'd like to add a 3rd free research report to today's offer. It's called The Secret Currency: How to Make 500% from the U.S. government's second currency. In it, I'll share with you a secret investment behind some of the world's richest families, a form of gold and silver that has nothing to do with mining stocks, mutual funds, futures, or bullion. It's been hoarded by dozens of wealthy families, from the Rothschilds to the DuPonts and the Morgans. And as you'll see, it's like regular gold and silver, only better, with the potential for higher gains. It's one of those unique outside-the-box opportunities that True Wealth has become famous for finding over the last 2 decades. And I'd love it if you joined us today so you can learn that yourself firsthand. Because I assure you, there won't be a better opportunity than this. The trade recommendations that you'll receive in these 3 free reports alone would probably cost hundreds, if not thousands of dollars in most places. But because I'm dedicated to helping as many people as I can grow their wealth in retirement to levels they never imagined during this melt-up, you'll receive all 3 special reports, the 2022 Melt-Up Blueprint, 2 triple-digit opportunities from the oil and commodity booms, The Secret Currency: How to Make 500% from the U.S. government's second currency, an entire year, 12 full issues of my monthly newsletter, True Wealth, access to our full open model portfolio containing at least a dozen open trade recommendations, all of which are currently within my buy range, and a 30-day, 100% risk-free guarantee that if you're not satisfied with the research you find in True Wealth, we will refund every penny of your subscription cost, plus you can keep all 3 reports. All for as little as $49, a full 75% off the regular price. I sincerely hope that you'll accept this offer today, especially with the level of opportunity that the Melt-Up is presenting to us right now. Remember, the same thing happened here in America back in the roaring 20s. Stocks doubled between October of 23 and October of 27. Then, within 2 years, they doubled again. It happened in the 1980s in Japan between 1978 and 1986, when the Nikkei rose from just over 5,000 to more than 13,000. But then the final melt-up arrived, and stocks in Japan tripled in value. And it happened again during the dot-com bubble of the 1990s. Between late 1991 and 1996, the NASDAQ doubled. But the boom wasn't over. In a final furious melt-up, stocks tripled in the space of 18 months. Imagine waking up one day to find the size of your retirement account has doubled, or maybe even tripled. I know it sounds impossible, but during a melt-up, you can really see your portfolio double faster than you ever thought possible. You just have to know the right things to buy and the right time to sell. And that's our mission here at True Wealth, to help you do both. Just ask True Wealth reader Dave, who wrote to tell us, "I have been following what you say for many years. You are logical in your approach, admit mistakes and do so readily, know what's important in the investment world and what is noise and fluff. You build confidence in others to be steadfast and commit to following proven investment techniques and principles. Thanks. Over the years, your advice has made me a better investor. I hope you'll accept this special offer today and put us to the test. I have the utmost confidence that we're up for it. To get started, just click the button below. Without a doubt, this could be the last bull market of this magnitude that you ever see. And before it's over, stocks have the potential to soar higher than most people can imagine. So don't let your fear of losing everything hold you back from this opportunity to double or even triple your retirement account. Follow the steps that I've laid out in this presentation, and you could see massive gains during the melt-up. Just click the button below to subscribe to True Wealth quickly and easily. Thanks for joining me today.